Hello everyone and welcome to the channel. My name is Brent and in today's video we are going to be doing our Stock Monday buys here on the 29th of March 2020. We have 3 days left here in March, then we're off into April. Now in this video we're going to go ahead and quickly take a look at stock futures up on the screen now. We're going to go ahead and jump over into the M1 Finance portfolio, take a look at the activity that we've had over the past few weeks or month since I haven't recorded any sort of stock buys video or stock sales video. I think I may have had one a bit ago, but I don't know if that I had released it. So we'll go ahead and cover the performance of the current portfolio, take a look at what stocks are up, what stocks are down, and take a look at some of the activity as far as what we have sold and what we have purchased. And then we are going to be buying some stocks up today. I do have a few stocks I'd like to share with you guys as far as, potentially have some good buying opportunity, but I'll leave that up for you guys to decide, of course, because I'm no financial advisor, so anything I say is not investment advice. It's just me taking a look at my portfolio and trying to decide what is a good stock to buy at the moment based on some fundamentals. So with that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue. Let's go ahead and get into the video. So Friday, it kind of set off kind of either flat or positive and negative. You can see here that Friday was very mixed. The S&P 500 was essentially flat. The NASDAQ finished up 0.75% up, and the Dow Jones finished 0.75% down. But the NASDAQ was negative last week, whereas the S&P and the Dow Jones were positive. Now here we can see that stock futures going into Monday morning. Now this can actually change. I'm actually recording this a bit before midnight here on Sunday. So we have the S&P and the NASDAQ up, but the NASDAQ is up by 0.75%. So jumping over into the quick recap, we see the S&P 500 put up a 1.57% gain. The Dow Jones put a 1.36% gain, and the NASDAQ lost a little over 0.5% there, down 0.58%. Now jumping over into the M1 Finance portfolio, we can see here that our overall performance has been pretty positive. We can see that our cash value is currently sitting a little over $30,000, and we have close to $3,000 sitting in our cash balance. Now we have sold out of a few positions, and we've also recently added to a few positions throughout the last month. So we'll go ahead and cover some of our winners and our losers in this portfolio. Now a couple of our top 3 winners, we have Apple up a nice whopping over 200% there. We have ABM Industries and Main Street Capital. We also have Lowe's, so those are our 4 big winners, up over 100% on those few positions. Then we have a few losers down here towards the bottom. I did completely sell out of McDonald's, Tanger Factory Outlet, and Waco Group. There's no more equity involved in these positions. So what I can actually do now is go ahead and remove them from my actual pie. So we'll go ahead and select McDonald's. We'll go ahead and select Waco Group and Tanger Factory Outlet, and we'll go ahead and remove those positions, and I'll just re-equalize my portfolio and save and confirm. Now I don't actually have any equity saved within those positions, so on the next trading date they're not going to the cash value isn't going to be automatically sold and reinvested into my portfolio. I've already sold those positions off, and there's really just no equity involved in them anymore, so I can remove them without triggering an automatic reinvestment. Now down here towards the bottom, we do have a few negatives. These 2 positions right here, I recently added. This SIGI here is a selective, and it's an insurance group. It's been very positive here lately, but not in the portfolio, just overall in the market. I see a lot more future performance, say 5-10 years out. This is a small mid-cap business that I believe has some really good growth potential in the future and also pays out a dividend. So I went ahead and moved into this one, and this is a real estate investment trust within the MJ area. So I don't know if I could say that on YouTube without getting my video flag there. So it's a real estate investment trust within MJ area. So I think it's a very interesting area. So I'm definitely kind of beefing that position up to a little over $1,000 right now. They had a bit of a wonky week. I think it may have been earnings. I think it was earnings. So I am still going to be adding $100 today on that position, as well as $100 to Siggy. And we'll go ahead and cover a few other positions that I believe are some really good buying opportunities at this moment. But let's go ahead and take a look at some of the activity over the past few weeks here. Now, starting back, let's go ahead and take a look at February. So the month would be 02. Let's go ahead and go back to the beginning there. And can we just... No, we have to actually enter a full date there. So today I think is the 20-some. Let's go ahead and take a look at the date. Today is the 28th, 2021. Okay. And it did not update it. Oh, wait, here we go. Okay. So back in the past, we did sell. We sold prior to that as well. So here back on February 18th, this is where we started to kind of unload a few positions in our portfolio that weren't really in line where I want to have my portfolio go in the future. So I completely sold out of Kellogg's, and then Genuine Parts, just kind of moving out of the retail automotive parts area. So completely sold out of those positions there. And I picked up Methode Electronics. This is kind of an interesting area. They have a ton of different electronic pieces that they create and develop, and they're about a $3 billion market cap company with much more room to grow as far as their potential for continuing to create and innovate. So I thought they were a very interesting company, and maybe in the future I'll go a little bit more in depth on them. But at the moment, I just kind of want to go through as much detail as I can. And then we did have a few lingering pieces of equity within Genuine Parts and Kellogg's. When I removed the pies from the portfolio, they sold off the remaining pieces there as well. Here we started buying a little bit more ticker symbol MEI as it was going into the negative. I just kind of saw, it went into the negative, threw another $50 at it, and moved on. On March 2nd, I threw $242 into it. Lockheed Martin had also been at a really good buying opportunity at $334. If we take a look now at Lockheed Martin, it is trading at $364. So this was another really good buying opportunity. I saw the chance at it, went ahead and purchased some more for Lockheed Martin. Now during this time here in early March, Eaton Vance was taken over by Morgan Stanley. So Eaton Vance got removed as a trading holding and got taken over by Morgan Stanley. I didn't have Morgan Stanley within my portfolio, so of course M1 Finance, what they like to do is they sell your position if you don't actually hold it in your portfolio. So here Morgan Stanley was completely sold out of my position, and back on March 2nd I continued to average down, or that may have been the same one. Yep, that may have been the same one there where I bought some Lockheed Martin and some Methode. On March 5th and March 8th, we received a few dividends. If we go moving on here, a few more dividends from Johnson & Johnson, Chevron, 3M, Walgreens, Consolidated Edison, Main Street Capital, and McDonald's. Realty Income, can't forget them. Now, mid-March, I wanted to continue thinning down my portfolio. So this is where I completely moved out of Walgreens. I had bought Walgreens 3 years ago, and if you look at the stock price of Walgreens over the past 3 years, let's go look at the, oh yeah, here we go, 3-year map. Walgreens has gone nowhere but down. So I bought it here in sometime mid 2019. It took me to here in 2021 where I sold out of this position at $53.73, which is a little higher than where I had initially purchased it. So I actually came out even on the position, and I picked up those dividends along the way. So really, I didn't make anything on capital appreciation. I did make some in dividends, and I just wanted to be out of retail. Walgreens, I feel, has a ton of competition in the pharmaceutical area and pharmacy. I could have purchase more back in 2020, but I just wanted to kind of hold on that position, buy other better opportunity stocks, and let that one fully recover before selling it out. So that's what I did there. And then we did have 8 buys, so I averaged down on AT&T, 7 property groups, SIGI, this is where I started adding these positions to the portfolio, IIPR, some more PFIZER, CONSOLIDATED, EDISON, Altria, and Waco Group. So then we, looks like back on March 19th, we added $50 more to IIPR. I think it had dipped down maybe 1 or 2%, so I just threw $50 at it. I told myself if it drops more than say 5%, I'll throw a little bit more. Stanley Black & Decker there paid out a dividend. Then here we had the area where we sold out of McDonald's, Tanger Factory Outlet, and Waco Group. Tanger Factory Outlet, this was a really interesting position. I didn't know for a while if it would actually fully recover. If we look at the 5-year trend here, and I sold out of this at $16.65, and I picked this one back up. I believe I bought it here on a dip back in 2019. I know I had held it for quite a while, so I saw this dip right here, and it was a double dip. That's usually a really good indicator when you have a double dip where the second dip is actually higher. But what we didn't expect here in 2020 was all those shutdowns. So here we had massive shutdowns during this time frame. I don't know if I had purchased more of Tanger Factory Outlet. I may have purchased a little bit more during this downturn, but once it had picked back up, I just decided this is a good opportunity for me to just kind of cut. I didn't lose anything. Again, I sold out of this at $16.65, which is actually higher where I had actually purchased. I don't know if I can see. There should be a search function here. I know I have it on the mobile device. So here, our original, let's go ahead and clear that. My original buy price, let's see here. I guess I never loaded on it a ton, but where I started buying it at was at $16. And I probably dipped down at $16.59, bought some more, and then it just went through a huge dip down. Look at this. It was trading at $5.26. So I did buy $200 worth of it back when it was just $5 way back then. And then once it all recovered, this went up basically 3x. But overall, happy to be out of that one and won't be purchasing more of that one here in the future. Let's go ahead and clear that up. And then we recently had a dividend payout from Lockheed Martin for $5.40. So that is some of the activity that we've had recently. Now there are a few positions that are negative in the portfolio as far as holdings. We have SIGI, Consolidated Edison, Altria, IIPR, AT&T, and Simon Property Group. Now at the moment, what I had been taking a look at, I posted over on Facebook here, that these stocks are stocks to consider. So we have Kimberly-Clark, Digital Realty Trust, Lockheed Martin, Consolidated Edison, and PFIZER. So I kind of added them here to the chart. We'll go ahead and remove Walgreens and Tanger Factory Outlet, and we'll go ahead and take a look at these 5 positions because I think that these are good opportunities at this time. Even though the market itself is trading near all-time highs, there's still good buying opportunities out there. So I want to go ahead and cover these 5 stocks, and then we'll go ahead and make our stock buys. So Kimberly-Clark right now is trading at $137.13. This is the 1-year time frame, which puts it at a yield over 3%. It's actually at a 3.17%. So over the past 3 years here, we can see that the stock price had a high of maybe 160 or so, it looks like, and then pull back now to 130s. We have had some support here. We can see that it hit a little bit below at this point, rebounded, and is now kind of moving up. It may hit this point once again and fall. We can see that it did have some lower lows back in March of 2020, and even if it is, long-term wise, this is still a really good buying opportunity. Every time you have these opportunities to buy these dips here in the market, here's a little double dip right here as well. What happened right afterwards? It went up, trended sideways for a while, had that massive fall in March, regained it, crept back high with everybody buying toilet paper and all sorts of tissue and all sorts of, wiping their tears, right? Had a nice stock peak there and then kind of came back down, simmering, and is currently trending sideways. So we were just kind of looking at this for the 1 year. The yield is offering, a very nice yield for a starting position. Now, as far as our financials go, if we take a look at their revenue, net income, and take a look at their earnings per share and their return on invested capital, we can see here that, let's take a look at their last 10 years here. So their revenue has been pretty steady. It has been looking like it's been decreasing, but it's more steady versus, Kimberly-Clark is a very large company. They have a lot of that everyone likes to have in their homes, whether it's tissue, toilet paper, all sorts of other items. They have just a ton of other items. So their revenue being consistent is pretty important. Their net income has been slowly growing. They're at $2.3 billion. If we take a look at their return on invested capital, that's at a whopping 27.23%. And their earnings per share here has been nice and steady here. They had a dip back in 2015, quickly recovered, had that dip in 2019, but have been recovering well. So general uptrend here is pretty positive. If we go ahead and remove the return on invested capital and take a look at their percentages over the past few years, we can see that their earnings per share is up 56% over the past 10 years. Their income is up 30%, and their revenue is essentially down 4%, but it's more important that they have growing income, their net income and earnings per share versus looking straight at their revenue. So maybe they're cutting ways to produce and they're finding better ways to save and use their money wisely to have those greater returns. So I think that still they offer a really good buying opportunity at this time in the market. Now let's go ahead and take a look next at Digital Realty Trust. Now this one isn't going to have the same level of buying opportunity. Whoops, I have the percentages in there. So this one, I would say that this is a little still fairly priced. I wouldn't say that to buy at this moment. It still looks like it has to decide, is it going to retrace and fall back down a little bit, below those 130s, or will it continue moving higher? Right now, over the past 1 year, we can see that we have highs of around 160 and we have lows of a little bit below 130. So that's a $30 swing, from 130 to 160, and right now we're whack splat in the middle, where you're getting a roughly 3.16% yield and a 1.42, and it's trading for $142. Now this is a real estate investment trust within the tech area. They have a lot of data centers located on the United States, so they have these huge data centers and they kind of lease them out for use. So let's go ahead and not look at their earnings per share. That's not going to matter for a REIT. Let's look at their funds from operation and take a look at that. And let's take a look at them over the past, I will say 10 years again. And we'll also take a look at their return on invested capital. Okay, so maybe on real estate investment trust, return on invested capital probably isn't a really good one there. But overall, let's take a look at these ones and take a look at them over the past 10 years. So revenue-wise, they're up 322% over the past 10 years. And this has been nice, steady growth. There's not huge dips here with their revenue. It's just pretty nice and consistent. Net income, it did take a bit of a dive, it looks like. I'm not sure if that is, here we are in 2021. Maybe their data centers aren't as in use as they had been. But overall, this could be why they are trading where they are trading at. And then we have their funds from operation. So versus, this is a real estate investment trust. So instead of using their earnings per share, we're looking at their funds from operation. And this is up 409% over the past 10 years, or roughly 1.78 billion. So really good, nice, consistent growth here. And if you're looking at their net income over the past 10 years, it's really not like crazy. When you look at it percentage-wise, it looks like it's a big, huge like moving chart, but here they stay pretty consistent within the $1 million area. So it's a very, I forgot what the market cap is on this company. I don't think it's very large. So if we take a look at the market cap, it's at 40 billion. So they have had a nice little leap there from 2020 into currently. So they're still a really nice growing business. But as we've seen there, this is kind of one that I don't believe is overvalued. I don't think it's undervalued. I think it's trying to make a good decision here. It could go either way at the moment. Just want to go ahead and bring that up. Lockheed Martin, this is one that I had recently purchased back in the 330s. I don't know if it's again, it's not down in the dumps at the moment where you're getting that high yield up in the threes, but it is still at a good buying opportunity where if you haven't purchased Lockheed Martin, you can start your position here at 364, get a 2.74% starting yield. And this one could go either way. Here, it could retrace and go back down in the 325s, or it can continue moving up to the 400s. So this one, when I looked at its financials, if we take a look at this one actually has really good financials. So I think with time, this one will just kind of, wherever it's at right now, in the future, it'll just continue moving like a speedboat. So here, we have their revenue in purple up 65 billion, net income in the orange at 6.8 billion, their free cash flow 6.4 billion, return on invested capital at a 40.51, and their earnings per share took a bit of a hit here in 2018. This may have just been tax purposes, tax change code, something happened there. But as of late, their earnings per share has been growing really, really fast. You can see here, nice and steady, took a dip here, tax reform, and boom, just shooting up to the sky. So if we take a look at them percentage-wise, you can see here that earnings per share has been skyrocketing up. The stock price in itself is not at highs, it's not at lows. It's kind of, simmering in the middle with the potential, it does look like it has the potential to move much higher, and give it 5-10 years, it probably will be much higher than where it's at now. So that is Lockheed Martin. We also have Consolidated Edison. This is a utility company, kind of interesting one here. And I don't know if I like as many utility companies as I had purchased. I may eventually end up thinning out some of my utility companies, but again, this one isn't at, say, overvalued, undervalued. I think if you own this one and you are negative in it, this is going to be one that I will buy more of today. This one is offering a little over 4% starting yield. It's not up in the 4.5s as it was, a couple months ago, but it's still offering a 4.12 with a high price of 84 and a low price down in maybe the mid 60s. Here at 74.44, it's not a bad buying opportunity. If we take a look at this one, it's pretty consistent. I'm not going to say, this is a utility company, so they're not going to be doing anything to go out of their way to have a ton of growth. They're going to be more consistent, and say people don't pay their bills, their utility bills, you're going to see that on their balance sheets and their fundamentals here. So revenue is down roughly 7.32% over 10 years ago. Net income is up 1.19. Free cash flow down 330%. And we have their earnings per share in the green down roughly 0.34%. So kind of looking at the chart here, I don't know. Actually, I had considered purchasing a bit more. Maybe I will kind of let this one simmer for the moment. And if it does pop up higher, I do have to look for better utility companies. I would like to still be invested in a few utility companies just to kind of diversify a bit. But this may not be one that offers a ton of growth in the future just because of looking at their fundamentals and their stock price kind of coming off those highs. There's probably a reason for it where we may not be finding the bottom yet here. So I'm going to go ahead and skip over that one at the moment. And let's go to our last one here, which is PFIZER. So let's go ahead and pop PFIZER in here. Everyone likes PFIZER because of their little vaccine that they recently released, right? So PFIZER is currently trading at $36.25. Looks like it had a high at around 42 and lows of down below 32. So we'll say maybe what, $5, $6 from those 52-week lows. Actually, it looks like it fell down into the 20s back about a year ago. So this one could be hit or miss. It does have some lows here, a little around $33, and some highs in the $42 range, but I feel like it may have more upside potential versus downside potential. This one's trading with a 4.22 yield, trading at 36.25. If we take a look at their revenue, net income, take a look at their return on invested capital and their earnings per share, take a look at them over the past 10 years, and let's take a look at percentage changes. We can see that the revenue is down 35.62%, but maybe they're looking at cutting costs, so maybe they're not bringing in as much money as they had in the past, but they're finding better ways to use their capital. To that one probably is not going to. Okay, so let's look at the return on invested capital. It's at an 8.16, so that's fine. And let's take a look at the percentages once again. So revenue is down, net income up 13.75, and earnings per share up 19.22. I think a lot of investors, I saw PFIZER in itself. So let's go look at the price here. So price is in the purple. It's been pretty consistent. I think PFIZER may have had a better buying opportunity, but kind of taking a look at it with you guys over its fundamentals, I think it does deserve to kind of be trading at near these prices. So we took a look at all 5 of these stocks, and after kind of reviewing them, I looked at all my positions here within the portfolio. I went through and put all of these stocks into Y charts here and went through, what are ones not trading near 52-week highs, but trading at where I would, where they would be reasonable at. And these 5 were the ones that, appeared through the thinning. Now, I'm not interested in buying more Consolidated Edison and PFIZER at the moment. I think that they're more high risk versus, medium risk or low risk. But I do think that Kimberly-Clark, Digital Realty Trust are really good buys. LOCKHEED Martin, I recently purchased more of, so I'm not going to be buying more of that one. Let's go ahead and also purchase a bit more of Innovative and Siggy here, just a little bit more. So let's go back here, KBM, KMB. We'll go buy. We'll go ahead and buy $100 of. Let's go 150. Kimberly-Clark, $150. Let's go. We hit done and back. And the other one was Digital Realty Trust. This one is showing a 41.16%. So we've had market gains there of $119.50 with earned dividends of $40.50. This one has a cash current value of $528. So I'm going to go ahead and add $200 into this one and continue and confirm and complete that transaction. And next we're going to go ahead and buy a bit more of Siggy. Now Siggy, I'm going to go ahead, it's only down very little, so I'm only going to put $50. Oops, not 500. I'm not going to buy a whole lot of that one. I would like it to drop down, say 5-10%, and that one I'll try and bump up a little bit more. And then the last position here, we're going to be adding a bit more of. This one's down over 5%, so we're going to go ahead and toss another, we'll go 150 into this one and confirm that, and done. So these positions aren't going to be completely filled out. I am going to eventually get these positions over $1,000 invested in them. I'm also going to be looking for other buying opportunities to use the remaining cash balance in the portfolio towards averaging down in different positions, or kind of building up those positions that aren't yet there. So you can see that a few of our positions have made it up into the $1,300 range. I would like to beef up my positions, continue to thin down all the positions, thin out anything I don't want to be invested in, and start bringing in and bumping up positions that I am currently invested in, even if they are positive. such as Digital Realty Trust, I think that they still are at a really good buying opportunity with plenty of upside potential in the future. So buying them even when they're green is still a really good buying opportunity. And I think Digital Realty Trust, yeah, so Digital Realty Trust goes ex-dividend on the 12th. Kimberly-Clark goes ex-dividend on the 4th. And IIPR goes ex-dividend on the 30th. So we have quite a few positions going ex-dividend here in March. So that's pretty exciting to look forward to. So that is going to be it for this video. Let me know down in the comment section below, what are some stocks that you are looking to buy at this time, or if you are currently selling off some of your portfolio to take some profits. Let me know down in the comment section below. With that said, if you are brand new to the channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye.